India, in fact, is already working on alternatives. It is reducing its dependence on Chinese imports. It is delinking itself from supply chains dominated by China. In fact, China is no longer India's top trading partner. It has been replaced by the United States. China slipped to the second spot in the last financial year. And China finds it very hard to accept this. So it's trying to come back on top by rejigging the numbers. Here's a report.
China is losing its grip on the Indian market. New Delhi has a new top trading partner now: the United States of America. Data from the last financial year is out. Bilateral trade between India and the US stood at close to $120 billion. What about China? It has slipped to the second spot. In 2020 to 21, the trade figure for China stood at around $115 billion. The numbers speak for themselves. India's bilateral trade with America is growing. India is cutting back its dependence on China. And Beijing doesn't like that one bit. It is challenging New Delhi's trade numbers. The Chinese Foreign Ministry came up with its own calculations. Beijing claims its trade volume with India stood at around 125 billion and not 115 billion. China has more complaints with India. Recently, Chinese tech companies like Xiaomi, Vivo and ZTE have faced scrutiny. They are being probed for financial misconduct in India. Beijing is miffed by the crackdown.
We firmly support Chinese companies to defend their legitimate rights and interests. The Indian side should act in accordance with the law and provide a fair, just and non-discriminatory business environment for Chinese enterprises to invest and operate in India.
China is known for strong statements and clever accounting, but it cannot contest the obvious trend. India is moving away from Chinese goods. This year, New Delhi secured 2 trade pacts with Australia and the UAE. More deals are in the pipeline. India has begun negotiations with the European Union, the United Kingdom and the Gulf Cooperation Council. With the United States, New Delhi is exploring other ways to expand trade. The focus is on improving market access and investments. The shift away from China has clear economic benefits for India. Going by one estimate, India can add $20 billion to its GDP by reducing its dependence on Chinese imports by half. How can New Delhi accomplish this? It can offer production-linked incentives to manufacturers who make in India. More opportunities can open up if India can integrate more into global supply chains. New Delhi is considering one such proposal: the America-led Indo-Pacific Economic Framework. Indian Prime Minister Narendra Modi had joined its launch in Tokyo last month. The Indo-Pacific region represents an opportunity for India. It accounts for more than 60% of the world's GDP and 50% of the global merchandise trade. If India can become a supplier to the Indo-Pacific, it can further shrink the market for Chinese goods, both at home and abroad.
WION is now available in your country. Download the app now and get all the news on the move.